Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Good evening to everyone in the conversion group. It's Thursday, February 5th, and I'm analyst Jang Jita. Remember those 3 characters. Please don't forget to like, subscribe, and share for us. If you have any investment questions, feel free to leave a comment. If there are any questions I don't get to answer right away, I'll make sure to address them in tomorrow's class. Just before class started, a bunch of students left comments about the market trends. There were a ton of questions flying around, a lot of concerns, and I'll be sharing those with everyone in a bit. Just before going live, literally a second or 2 before I was about to start, my computer screen glitched for a moment and gave me quite a scare. I hope you can all hear me clearly. If the audio's coming through fine, just let me know, okay? Just let me know. Checking everyone online. Hui Jun, you look beautiful. Daisy Ye, Yulun Gay, Anna Ya, and Fei De Yu. Good evening. Staff member, hello. New student Shendai MI, Shendai, Alvin Chan, and Michelin. Good evening. Xiaomao LV and Alice Fool, and also Keepal Shui. Good evening. Just now, who was that? Oh, Dino 886 boy. Hello. Someone also said, after 2 days of drops, my stars are almost gone. All right, everything's normal. Okay, good. Since everything's normal, let's keep going. Hacker Tui, good evening. And you, Baokun, good evening. Caesar, yesterday we mentioned to you about Micron and SanDisk and did some technical analysis related to them. I hope you saw it. Yesterday, right at the start of the session, I told everyone, if you have these stocks in your portfolio, pay attention. If the 10-day moving average is broken, you should sell for now. If the 10-day line is broken, just sell for now. Easter, M8Y4I. What kind of speed is that? Good evening. All right, let me first answer the question just now from Shendai Mimi. This name is pretty unique. Or is it Mimi Shendai? Shendai Mimi. They asked if Bitcoin drops below around $77,000 or so, will it trigger any chain reactions in other markets? Well, chain reactions, more or less, people will be concerned. There will be some worry. But in reality, now, talking about MicroStrategy, this company, as far as I know, their financial report is supposed to be released soon, maybe tomorrow if things go quickly. I'm not sure if it's out yet, but whether it's today or tomorrow, everyone should pay attention to the data that comes out. For companies that are involved in cryptocurrencies, like those that buy Bitcoin or Ethereum as their reserve assets, you really need to keep an eye on them. That's because recently, all these cryptocurrencies have been dropping and the declines have been pretty steep. So, for example, Sailors, so MicroStrategy. Take MicroStrategy as an example. This company specifically buys Bitcoin as a reserve, right? So when Bitcoin is going up, I think the value of the reserves held by this company increases, and so the company's stock price rises. But as you can see, like with MicroStrategy, its stock price has been dropping continuously lately, and that's because Bitcoin has been plummeting. So what you need to pay attention to are companies that hold these cryptocurrencies, or those that are specifically issuing or trading these virtual currencies, like exchanges like Coinbase. Or companies like Circle, Circle, those that deal with cryptocurrencies, stablecoins, Ethereum, and so on. These kinds of companies are more heavily affected. So you might ask, since the impact is pretty significant, will the drop in Bitcoin cause a huge shock to the entire US stock market or to exchange rates or even the gold and so on? I think we need to look at this separately. It could have a big impact on virtual currencies or the issuers related to virtual currencies, but will it directly affect the performance of the so-called Magnificent Seven stocks or the development of AI? Not necessarily. So it's better to look at it as 2 separate issues. So that's a simple answer to Shendai Imai's question. Yes, it will have an impact, but it's not like the entire market is going to crash. It's not that serious, really. All right, just now, Germany Jeffrey asked, Dino said to check with the teacher in Q4. Hello. Jeffrey asked why Google had a big drop today. Right, that's what I want to talk to everyone about. The earnings report was good, so why did the stock drop sharply? So as you can see from the start, I haven't even talked about the investment highlights yet. Actually, today, let's see if there's time. Today, I'll see if there's time to go over some data. If we have time, I'll talk about it, and if not, we'll just continue with the investment highlights and related topics. Also, good evening, everyone. First, let's take a look. Someone just asked about Google. I especially reminded everyone about Google today because it's extremely important. It's one of the Magnificent Seven. Of the Mag 7, it's the only stock that's currently strong. But why did it drop 3% in US pre-market? That's a big dip. It's due to CapEx, AI cash flow, and industry growth concerns. What are those exactly? The earnings report was so good, so I'll explain this shortly. It's not just Google. Many others are facing the same. Acer, our workday ends late since we record from 9 to 10. Now, the main focus? The Xi-Trump talks have begun. These paved the way for Trump's April China visit, serving as preliminary moves. So what were the key points of the Xi-Trump talks? How will they impact the US stock market or China's economy? Several important topics were mentioned, and I'll break them down shortly. With Google down 4%, the US market faces significant pressure today. Second, regarding US-Iran geopolitical risks and the gray rhino issue, talks are expected tomorrow. While previously rumored for Turkey, negotiations will now be held in Oman after some back-and-forth changes. The talks concern the nuclear agreement. Successful negotiations could lower oil prices, but if they fail, geopolitical risks may hit global markets, causing greater economic fallout. So be cautious. Regarding industry, most companies have released financial reports, with 70 to 80% now public. For key earnings, Google reported today and Amazon announces tomorrow. By late February, AI leader Nvidia reports on the 26th. By early July, about half of major companies will have reported. Interestingly, positive results don't always boost stock prices because investors are scrutinizing details or expecting even better results from top performers. But if these earnings reports show that valuations are too high, or if the results fall short of expectations, then the stock prices can drop quite sharply. So looking at the current situation, the momentum from the January rally is carrying over into February, but February is generally more volatile. The fluctuations become larger because the January effect has passed, and in February, there tends to be a lot of profit taking and selling pressure. Combined with the ongoing release of earnings reports, this is what we're seeing now. A lot of companies, remember, many companies' positive earnings reports are just a baseline, but as soon as there's a negative surprise or results that fall short of expectations, remember to get out quickly, run first and ask questions later. If you don't have time to exit, then make sure to reduce your positions before the earnings are announced, because we never know if the report will be good or bad. Even if the results are positive, the stock might not go up, but if the results are negative, it will definitely drop. Right now, the fourth quarter earnings season is coming to an end. This is just to give you an overview of the current situation. In a moment, I'll talk to you about Google's situation, as well as give an update on Qualcomm and a few other company stocks. You really need to pay special attention to these because concerns about capital expenditures are starting to resurface again. As for the two weight loss drug companies, they are Eli Lilly and Novo Nordisk. Their earnings reports were mixed, one good, one bad. So which company is actually doing well and which one isn't? And what will happen to their stock prices going forward? Tech stocks are pulling back, so is it a good idea to get into these non-tech pharmaceutical stocks? Tonight, I'll also be giving everyone an analysis of this. All right, good evening, good night. Also, hello to Zero Number. Good evening. Have you taken profits yet? I don't know if everyone has already taken profits. Bubble Water asked whether individual stock warrants are valuable references when buying stocks. Are individual stock warrants a good reference for stock trading? I think it's okay. It's all right. You can use it as a reference, but if you're really talking about the reference value for a stock's price movement, I think you should look at the fundamentals, financial reports, and then who is buying or selling in terms of the chips, as well as technicals and news and so on. As for individual stock warrants, things like the strike price and so on, you can refer to them if you want, but it doesn't necessarily mean the price will reach that level. It's just like options and futures. Options will tell you a strike price, but it may or may not get there. Maybe it's at 32,000 points or 31,000 points. You know where your put is, where it's being exercised, where the highest trading volume is. You can use that as a kind of reference, so-called reference point. Support and resistance levels in a range, but whether the stock price or the index will actually reach that point is not certain. So you can use it as a reference, treat it as a reference tool, but it doesn't necessarily mean it's completely, absolutely accurate. Still, it's something you can refer to. Back to economic data. Tonight at 8 o'clock and 9:15, the ECB and BOE announce interest rate decisions. These won't impact the market much, as rates should stay unchanged. For instance, the Bank of England just held rates at 3.75%, exactly as expected. As for the European Central Bank, at 9:15, they'll announce the expected and previous rate of 2%. It's likely to stay at 2% today as well, so we'll take a look at this together at 9:15. In addition, the economic data at 9:30 is a bit more important. It's about the U.S. initial and continuing jobless claims. For initial claims, the previous figure was 209,000, and it's expected to rise slightly to 212,000. As for continuing claims, the previous number was 1.827 million, and it's expected to increase to 1.847 million. So at 9:30 tonight, we'll track this data together to see whether the overall macro market is cooling down or if it's not as bad as people might think. If the job market shows signs of cooling, then the urgency for the Federal Reserve to cut interest rates will increase because a weak job market puts pressure on them. So this is really two sides of the same coin, a balancing act. Also, at 11 p.m. tonight, there will be the U.S. December JOLTS job openings data. The previous figure was 7.146 million, and the expectation is that it will reach 7.2 million. So that's the economic data part. Later, at 9:15 and 9:30, we'll be looking at these data releases as they come out, especially the 9:30 employment numbers, which tend to have a more direct impact on the market. As for the officials' remarks, well, regarding what the officials have to say, let's see what they have in store for us. All right, let's not stand on ceremony. Let's get right into it. As for the banana aroma, no, it's not that there's a banana smell. Someone just mentioned the Federal Reserve, and sometimes when I call out the names of these officials, every time it gets to these late night live streams, it's pretty late, right? Then my blood sugar starts to drop. When your blood sugar drops, you start craving a late night snack, and when it drops, your memory gets fuzzy because it's nighttime. So just now, I accidentally, I was about to say the name of a Fed governor. I suddenly blurted out the name banana aroma. That was really weird. Maybe I really am just hungry. So about Kukris. Kukris said that what he's more concerned about is the stagnation of progress on inflation rather than weakness in the job market. He believes that as long as the cumulative pressure from tariffs continues to push prices up and hasn't subsided yet, he won't support another rate cut. Now, you might ask, teacher, is what he says really important? Of course it's important, because he's still a current board member. Even though Trump doesn't like him and really wants to get rid of him, trying to dig up things like real estate or loan fraud and all sorts of stuff to take him down, he just can't be removed right now. The Supreme Court has ruled that he's not guilty, and you can't use reasons like that to get rid of him. All right, so about this Cook, would you say he leans more towards being a dove or a hawk? He's more dovish. So does this have a big impact on the Federal Reserve? In my opinion, and generally speaking, each year there are about 12 voting seats with voting rights. So there are 12 members, which means basically as long as Trump can secure support from more than half for a rate cut, that's enough. More than half supporting a rate cut. So out of 12 voting members, you need to get 7. If you do the math, after May, the chairperson might be replaced. And among the governors, like Milan or, for example, Waller and Bowman, they all tend to support Trump more. Also, I remember that Bostic is supposed to step down at the end of February. So if he leaves at the end of February, that adds another member. But that member might not have voting rights. So with people from here and there, I think right now Trump has control over 4 to 5 relatively dovish members. So there should be a chance. As long as he gets more than 7 votes, then whether there's a chance for a rate cut in May or maybe June is still something to consider, right? As for Booker, he'll just keep maintaining a hawkish stance. As long as the majority of the committee members aren't hawks, then after June or in the second half of the year, once Powell steps down, it's still reasonable to expect the Fed to cut rates. Now, regarding Trump, he's made it very clear. Trump directly said that explicitly supporting rate cuts is a necessary condition for being chosen as the next chair. In other words, he's giving everyone a heads up. Recently, everyone's been worried, saying things like, oh, Waller used to be hawkish, so after he takes office, maybe he won't listen to Trump, maybe he won't move that quickly. So today, Trump just told everyone, and of course, in our show a couple of days ago, we also mentioned that, well, whoever Trump picks now is definitely going to be on Trump's side. Whatever Trump does, that's the way things are going to go. He calls the shots, and whoever he appoints will just follow orders. If you don't, you wouldn't be made Fed chair in the first place. So Trump is basically telling everyone that once Waller takes office, he'll likely continue with rate cuts. So the soonest we think, well, maybe the very soonest, after Powell steps down in May. I noticed today the camera's shutting off a lot faster, huh? And it's already turned off several times just now. Not sure if it's because the weather's been getting hotter these past couple of days. Oh, right. Speaking of the weather, this Saturday and Sunday are supposed to be the coldest days across the whole province. I heard it might drop to 8 or 9 degrees. So everyone, don't be fooled by today's sunshine. The sun yesterday, today, and maybe tomorrow might feel a bit warmer, but the weather will start to change tomorrow. Then Saturday will be the toughest, so everyone really needs to pay attention, okay? This applies to the whole province. Actually, all of Taiwan is the same, So in the officials' remarks section, I'll just tell everyone tonight, there's no need to be overly pessimistic. Overall, after Powell steps down in May, things will gradually move toward interest rate cuts. Economic data like non-farm payrolls and the unemployment rate are delayed until February 11th, so tomorrow nothing will be released. Next week, after our group discussion, the show goes on. Goodnight Heroes continues through the Chinese New Year holiday. Even during the Lunar New Year, the Good Night program will still be here to serve everyone. Yup, it's basically around the clock. As long as the US stock market isn't closed, we'll keep going. This analysis and everything, I'll probably be on duty until February 20th, which I think is the 4th day of the Lunar New Year, February 20th. So when we're online at that time, we'll also chat with everyone about the market. And if there's enough time, maybe I'll share a bit in that episode. Maybe talk about the Granville's 8 rules, or go over some basics of the Fibonacci sequence and so on. If time allows, I'll add a bit more for everyone on February 20th, the 4th day of the Lunar New Year. As for the data part anyway, the non-farm payroll report will be postponed to next week, February 11th, and the CPI will be postponed to February 13th. Regarding some updates on geopolitical risks, just to add for everyone, as for the conversation between Xi Jinping and Trump, from what we can see, they said they had a phone call, right? After the call, Xi Jinping also spoke with Russia's leader. The prime minister, what's his name, Putin, also had a video call. Anyway, no matter what they talked about, it's basically just to pave the way for Trump's visit to mainland China in April. As for what they actually discussed, there was a lot, a whole lot. It probably included things like, for example, he mentioned, of course, the Taiwan issue will also be discussed, right? Then there are things like trade, some military cooperation or confrontation, purchases, and so on. Topics like Ukraine, Russia, Iran, and whether China will buy from the US. Things like crude oil, natural gas, soybeans, and so on. These are all things that will be talked about during the visit to China in April. So when it comes to discussing these things, it's basically a whole basket. It's just a string, a big pile of stuff. Let me remind everyone first, these things definitely won't all be settled in April. It's impossible for everything to be settled during his visit to China. All the negotiations wrapped up in one trip? No way. But what he will do is gradually bring up these issues, put them on the table for discussion. Once they're out there, it's up to the junior folks or the staff, like economic advisors, trade advisors, to handle the follow-up negotiations. So in April, Trump might bring up what I just mentioned. These items, these projects will be brought up, but no one knows when they'll actually be settled. Anyway, they'll just keep negotiating them one by one, and the direction of the talks will probably be more positive. Why? Because don't forget, the US has midterm elections this year. So Trump is unlikely to take an extremely tough stance on the trade war either before or after his visit to China. If he keeps pushing it, all the political issues will flare up, the trade war will escalate, and if China stops selling rare earths to the US, then things will get really troublesome. It's possible that this year his approval ratings could really drop very, very low. This year, it might even get to the point where the Republican Party doesn't even need to bother running in the House and Senate elections. So, considering the election, I think when he's talking with Xi Jinping or negotiating with China and even other countries, he'll tend to take a more positive approach. Just keep this in mind for now. Just keep it in your heart. Negotiations will be more positive, mainly because of election considerations. So, regarding the timing and opportunities for the US, even though Cook's remarks have been relatively hawkish, and you can see that recent economic data seems pretty good, the PMI performance has also been quite decent. So the strength or frequency of rate cuts doesn't seem to be as urgent as everyone imagined. That's why you see the yield on the 10-year Treasury coming to 4.26 and the midterm rate at 3.13. Basically, they're just stuck there. But overall, the market atmosphere still expects there might be 2 more rate cuts this year. Whether those 2 cuts happen in May and June or in the second half of the year, I don't think it really matters that much. Anyway, the total for this year is probably going to be about 2 opportunities. And this year is the year of the horse. I'll have a chance to talk to everyone about strategies related to the year of the horse, how to operate and plan accordingly. But since the year of the horse isn't here yet, let's wait until after the new year to discuss it in detail. As for this year's market, I think it'll be an exciting year with significant market volatility. When riding, hold the reins tight. If you're not careful, you could be thrown off instantly. Swings will be huge, so be cautious. After all, it's the bull market's 4th year. From 2023 to 25, this marks the 4th year of the bull run starting in 2016. How should we proceed? We'll break it down on coining night. The US dollar, shown in purple, remains in a weak, choppy trend. Despite some incentives causing a slight short-term rebound, the overall momentum is still volatile. Today, it rose slightly by 0.12%. All right, for the hacker session, we'll cover instructional content if there's time. We'll see. Zero Number asked, do rate cuts and balance sheet shrinking stimulate the US economy? Compare the scale of rate cuts versus balance sheet reduction to see which impacts more, which matters more. The teacher asked if we put Guai Guai snacks on the camera. We put them there, on the main computer and everywhere. The green ones too. But equipment still acts up. Maybe old machines just won't cooperate despite our daily hard work and morning copying. And then at night, we go do other things, right? If the camera's running for a long time, it might overheat or something like that. So to answer this question from Zero Number about rate cuts and balance sheet reduction, if the rate cuts are significant, then of course it's generally positive for the US economy and the US stock market. Although balance sheet reduction itself is a form of monetary tightening, while expanding the balance sheet, quantitative easing, QE, is more accommodative, and quantitative tightening, QT, is more restrictive. So you have to look at which is stronger, the force of the balance sheet reduction or the extent of the rate cuts. Is it possible to cut rates and reduce the balance sheet at the same time? Yes, it is. But you have to see which one has a bigger impact. If the rate cuts are larger, then the impact of the balance sheet reduction will be relatively smaller. So it's basically like this. It's the concept of A plus B equals C. Let's move on to the next situation, okay? All right, so what should it be? The US is proactively reaching out to China for talks, so they're just going ahead with the discussions. Okay, we'll just wait and see what happens when they meet, and then we'll take another look at the outcome. As for the other issue, Russia, the US, and Ukraine, to be honest, we'll just have to see how things go with them. They're continuing their talks, and even though there are trilateral meetings and Zelensky says he'll be exchanging tomahawks soon, Secretary of State Rubio said there's been progress, but the most difficult issues haven't been resolved. So, does everyone know what the toughest issue is? When you look at the Ukraine-Russia issue, you really only need to pay attention to a few things. If those few things are settled, then they'll reconcile. If those things aren't resolved, there's no point in even talking, because the fighting will just go on. So which things are those? Just remember these. First, has Ukraine given up on joining NATO? That's the first thing. Has Ukraine given up on joining NATO? Second, if Ukraine and Russia agree to a ceasefire, is there a chance that military forces from Europe or the West will be stationed in Ukraine for defense? This is what Russia is concerned about. Russia's strongly opposed to this, right? If both sides agree to a ceasefire and stop fighting, even if there's a ceasefire, Russia has insisted that the West cannot send troops or station forces in Ukraine. Because wouldn't that be basically the same as Ukraine joining NATO? So, no Western military forces can enter Ukraine. That's the second condition. The third condition is the trickiest one. The third condition is that wherever the current front lines are between Ukraine and Russia, whichever areas have already been taken by Russia, or wherever the borders have shifted, or whichever side is stronger in a particular area, What happens to all those contested areas, especially those towns in eastern Ukraine? Any place that Russia has taken after the war, all of it would belong to Russia. In other words, it's somewhat like demanding that Ukraine cede territory in exchange for peace. Remember these three things. Without agreement on them, the Russia-Ukraine war won't be resolved. If these aren't settled, negotiations are pointless. These points are crucial. Minor issues like coordinating Tomahawk missiles are simple in comparison. Until key issues are resolved, the Ukraine-Russia conflict won't end. First, Ukraine stays out of NATO. Second, no Western forces in Ukraine. Third, land for peace. These are the three essentials. As for Iran, talks start tomorrow, February 6th, in Oman. The US wants Iran to stop enriching uranium, but Iran refuses, claiming peaceful use. They claim a right to peaceful nuclear energy. Both sides argue they're right. In the end, who is? We'll see the judgment on February 6th. The outcome of Iran's gray rhino issue is key. More tomorrow. If talks go well, that's the bull. Prices might drop back below the 200-day MA. But if conflict arises or talks stall and both sides quit, crude could hold above the 200-day MA and surge. Keep an eye on this. Right now, the biggest geopolitical risk is Iran. Everything else has little impact. Tomorrow's unemployment and non-farm payroll data won't matter either, as they've been moved to around February 11th. The Taiwan market is closed on February 11th, so there's no trading impact there. If you're trading US stocks, just note it's been postponed to that day. All right, Hector, I mentioned that last year I also went to the Kaohsiung branch of Goldman Sachs to participate, and Mr. Gao did a market analysis. Yeah, that's right. At that time, I was doing market analysis at Goldman Sachs in Kaohsiung. That's correct. This year, let's see if we can arrange something. Maybe in March. See if there's a chance to go to Kaohsiung again. If there's an opportunity, I'll let everyone know. It's been quite a while since I last went to Kaohsiung. When was the last time I went? I'm not sure if the last time I went to Kaohsiung was in May or June of last year. Anyway, it's been more than half a year. Definitely more than half a year. My last talk seemed to be in October last year, and that was in Yonghe. Not sure if anyone here went to Yonghe, but yeah, it was in Yonghe in October last year. Then in November and December, I just took some time off for the holidays since I didn't have time to go anywhere. January and February were the Lunar New Year, and everyone was busy again. So the earliest I think would be March, if there's a chance. We'll let everyone know in advance once we decide where it'll be held. Yeah, the year of the snake has really had its ups and downs, right? No sparkling water this time. Time flies. Another year is almost over, and everyone's a year older, aren't we? Yep, we've all gotten a year older. Anyway, I hope everyone made a lot of money this past year. And as we head into the new year, 2026, I wish you all instant success. Just keep making money. That's the way to go. Now, let's take a look at Google. Google is pretty interesting, you know? This is what I've been telling everyone. Right now, a lot of US stocks are showing good earnings reports. Many are meeting expectations, which is like getting a solid grade. Being a good student and scoring high is considered the baseline. But if your score drops even a little, then I'll have to... If you slip up, then you'll really get hammered. Google's no exception. It's just like what happened with AMD yesterday. AMD, Suja Feng's AMD, had a fourth quarter earnings report that beat expectations, and the outlook for the first quarter was also good. Everything beat expectations. But just because of the first quarter's earnings report, expected at $9.8 billion, some felt that given AI growth and capex, it should hit $10 billion. Missing by just $200 million felt slightly underwhelming. Perhaps it's just okay. They didn't get a 98, only 94. So yesterday, their stock fell 17%. That's the current situation. Google's stock also dropped 3 or 4% before the market opened today. Americans say Yonghe is interesting. Yeah, it's interesting. Looking at Google's Q4 report, revenue hit $113.8 billion, up 18% year over year, beating records. EPS was $2.82, up 30%, also topping estimates. Cloud revenue reached $17.7 billion, rising nearly 50%, better than expected. Search and other segments stayed strong, with most areas performing well. YouTube's ad revenue was $11.4 billion, slightly below expectations. Other units like Waymo are still in the startup phase and likely saw losses this year, including through the fourth quarter. The loss was 3.6 billion yuan, and the annual loss grew by as much as 200%. That's a 200% increase in losses. But overall, in 2025, the total annual revenue was close to breaking through 400 billion. All of that's pretty good. EPS 1.08 billion is excellent. Those are all good news. Isn't Gemini's AI platform really impressive, right? Gemini's number of active users keeps growing, 750 million people, which is higher than last quarter's 650 million. That's great. And their search usage keeps hitting new highs. And then the key point he mentioned later is that he estimates capital expenditures in 2026 will reach as high as 175 to 185 billion yuan. That's an incredibly staggering figure. If you still remember, just recently Meta, Facebook, also announced its latest capital expenditure numbers, right? It was 70 to 80 billion, then suddenly skyrocketed. This year, it's estimated at 110 to 130 billion dollars, almost doubling. Microsoft and Meta are both significantly increasing their capital spending. And Google, too. Google said they're going to raise it to nearly $180 billion. You have to realize their capital expenditure in 2025 was only $91 billion last year, and this year it's actually going to double to $180 billion. So what does this mean? It means that investment in AI infrastructure, and AI demand is still booming. If it weren't growing this rapidly, these companies wouldn't be increasing their capital expenditures by so much. In other words, why are they doing this? It's because they've secured enough orders, which gives them the confidence to keep expanding their facilities and making continuous investments. This includes companies like TSMC as well. Last year, Company A increased its capital expenditure from about $35 billion to $40 billion and kept raising it. In their latest financial report, they announced that their capital spending would reach $50 billion, or even as high as $52 to $56 billion. That's a huge amount. So whether it's the 7 giants, 8 giants, 9 giants, or these other large tech companies, all the major players in the AI 5 are pouring money into this effort. Let's break this down. This means that the future trend of AI development is still very strong. Development is still robust, things are going great, and orders keep pouring in. But the bigger issue now is that people can't see that far ahead. No one knows what AI will look like in the next 6 months, a year, or even 2 years. Will it keep booming? Will orders keep coming in so fast that supply can't keep up with demand? Right now, no one can see that far ahead. Currently, the market's vision is pretty short-sighted and focused on immediate gains. All people see is these big companies pouring in massive capital expenditures and costs, but it still looks like there's no sign of $100 billion or $200 billion in cash flow coming back every quarter. So it ends up that the more money these capital-intensive companies spend, the more the market questions them. What are people worried about? They're concerned that even though these companies are generating decent revenue and meeting expectations, with all this spending, will the free cash flow, FCF, ever come back? Will the revenue really be as high as projected? For example, with OpenAI, if you invest $100 billion or $300 billion, can you really get that money back? Compared to, say, take Oracle, for example. Whether it's their capital expenditures or constantly taking on more debt, raising $25 billion, $30 billion, $40 billion, $50 billion, taking on so much debt, can they really earn that money back? That's why Oracle's stock price keeps dropping, because the market's concern and assessment is that with so much debt, will they end up not being able to make that money back at all? Gradually, this idea of AI as a perpetual motion machine is starting to affect even those AI giants that originally had pretty solid fundamentals. Take Microsoft, Meta, or even Google today as examples. When your capital expenditure jumps from $91 billion last year to $180 billion this year, doubling, people start to worry. After all, there's a precedent. Look at Oracle. It kind of feels the same way. So now everyone's worried. If this so-called perpetual motion machine suddenly has a weak link, if someone drops the ball, will this perpetual motion machine really keep running? If even one of these companies can't keep up, then this whole cycle can't connect. Are you really going to keep throwing that much money into it? That's exactly what everyone is concerned and worried about. So capital expenditures keep increasing year after year, and the pressure on everyone just keeps getting bigger. And then, like I just mentioned, right now, every company's stock price is at a historic high, so everyone is treating each company as if it's a top student. So strong revenue and profit reports are just the baseline now. That's the basic requirement for being considered a top performer. With these high valuations, companies have to meet that basic standard. But if their performance falls even a little short of expectations, like what happened with AMD yesterday, 98 billion versus 100 billion, it's just a 2 billion difference, but the stock still got hammered, dropping 17%. That's the kind of situation we're seeing. Plus, with the huge debt burden from capital expenditures and the pressure of rising costs, under this double whammy, you'll notice that even companies with good earnings reports lately don't necessarily see their stock prices go up. But if there's even a hint of trouble, the stock just plummets. That's why, even though Google's earnings report was excellent, really truly excellent, its revenue reached over $400 billion, which is absolutely outstanding. But now, even though it's great, people are saying your capital expenditures are just too high. And as soon as there's even a slight disturbance, people start to think the other way around. They'll say, wow, you did really well this quarter, but what about next quarter? Will you still perform this well next time? What if your first quarter results aren't as good? So now people are wondering if this current high is actually the historical peak. That's what investors in the market are worried about right now. It's like, the expectations just keep getting higher and higher, and you want more and more revenue. That's why, even though Google is clearly performing well, it dropped 2% overall. In pre-market, it was already down 3%. We'll keep an eye on it. Its stock and fundamentals remain solid. Among the Magnificent Seven, it's one of the strongest. If it pulls back, watch the 50-day MA. Actually, you can just look at the chart to see where the price is in relation to the moving averages. If the price can still hold above the 50-day moving average today, then there's really not much of a problem, unless it breaks through its strongest support area. If it even falls below Google's quarterly moving average, then the correction from the recent gains could drag on longer. But this doesn't mean it's turning bearish. It hasn't reached the point where a long-term bull turns into a long-term bear, so it's not that scary. Don't scare yourself. Right now, the market sentiment is shifting. As the atmosphere in the market changes, people tend to become more short-sighted and focused on immediate gains. This will gradually create more pressure on stock prices, and that's the kind of situation we're seeing now. Oh, someone asked about 3565. Is there any hope for OKLO? Is there any hope? Yeah. Speaking of OKLO, we talked about it yesterday. Yesterday, I briefly pulled up OKLO's stock price and showed it, including some fundamentals, and gave everyone a bit more information. So you can take a look at yesterday's simple analysis. The moving average we drew has already been broken, including the 200-day line. It remains weak in the short term, but as it moves down, it's hitting a broadening formation, with yesterday's low touching that point. Yesterday's low touched it, so watch that point. Today, watch for a break below the bottom. If it holds, it hits short-term support, and a technical rebound may follow. For now, view it as a post-decline bounce. If, unfortunately, even that downward trend line, which I drew yesterday, and you can check out yesterday's show for it, if it breaks below that blue moving average line I mentioned at the beginning, then you need to be a bit cautious. It could turn into a situation where it falls further, and then there might be a pullback to address this issue first. Alright, so who's next? Let me take a look at your comments. I'll go through them one by one. If I don't get to them all in time, I might have to reply to everyone tomorrow. And then both Open and Oracle got hit hard. Got knocked down. Yeah, that's right. Alright, 520 Happiness Store. Good evening, good evening. Hello to the B King and the B Team. B King buzzing around, all the market logic, right? Anyway, right now, everyone just needs to pay a bit more attention to your position levels. Whatever you do, don't go all in. Don't go all in. Whether it's a good company or a bad company, there are just a lot of things going on. It's just like that. Underperformers get kicked while they're down, while successful companies become the foundation. The geopolitical risk I mentioned refers to the Ukraine situation. Remember those 3 points. Also, there's Qualcomm. Qualcomm is baffling. Their Q4 report beat expectations again, like a model student. Revenue hit $12.2 billion, up 5% year over year, with EPS also beating. However, the Q1 outlook is below expectations, with EPS projected between $2.45 and $2.55. Why is their low outlook surprising? Everyone's talking about the AI memory shortage. It's because major firms like Samsung and Micron are shifting focus to high-end HBM3 and HBM4 chips, specifically for these applications. The demand from big AI companies or chip development has led to this. So now the more general consumer grade lower end, or what we call regular consumer double data rate 4, double data rate 5 memory, nobody is making those. Since no one is producing them, it leads to price increases because there's a shortage and not enough production capacity, so prices go up. As prices rise, major firms like Micron, Samsung, and SK Hynix have seen big increases. Taiwanese firms like Nanya and Winbond are seeing hikes too. But one company's been hurt by this shortage, chipmaker Qualcomm. They noted their Q1 report missed targets because high data center demand for memory took up capacity for smartphones. This impacted mobile orders, especially with conservative orders from Chinese clients affecting the overall chip business. What he means is this. Everyone's memory chips are all being used to develop AI now. So, like I just mentioned, chips for smartphones and other consumer electronics can't be produced because of the shortage. Since they can't be made, people don't dare to place orders recklessly. Even if you have an order, you can't fulfill it. So, low capacity limits orders, cutting revenue. That's his point. Here, it's falling for no clear reason. As for Qualcomm, despite yesterday's small gain, its pre-market price today plunged nearly 10%. But to be fair, this bad news for Qualcomm today, the truth is its drop didn't just start today. It's just that today's big drop happened because of this reason. But if we take a step back, Qualcomm's decline didn't just start today either. Qualcomm's upward trend line has extended since last August. I've shown you this before, but it gapped down and broke that line in mid-January around $168. It then kept dropping to $148. This isn't just about memory shortages or phone supply. Those are just reasons for today's continued drop and new lows. Looking back, Qualcomm was already dropping in January. Many companies didn't just start falling recently. It's not just about current US events. For instance, during pullbacks in the Nasdaq or semiconductor sector, some stocks simply failed to hold their levels. Except for the strong Dow, other indices saw stocks dropping even before the market pullback. Many had been falling for a while. That's why we've spent the last month reminding you, indices are at record highs. Remember to take profits at these highs, then wait for pullbacks to buy quality stocks. Only by selling off a portion can you have the funds to buy back in at a good low point. If you don't sell, you won't have any extra capital to buy back in later. Of course, I've heard some of my students tell me, "Teacher, don't worry, we have plenty of money. Even if we don't sell, we'll still have money to buy when the market drops." Sorry, I underestimated everyone's wealth. But if you're not someone with that much wealth, you really need to sell first so you'll have the chance to buy at a lower price. That's just how it is. For students who have a large amount of capital, it might not make much of a difference. You can just keep buying whenever the price drops, and whether or not you sell at a high point is really up to your own investment strategy. That's fine too, that works. So, of course, some students joke with me and say, "It's okay if we don't sell, we're not short on money, so it's no big deal." That's a different story then. Now, regarding Qualcomm, let me just mention one last thing. An analyst from Bank of America named Ali said that recently chip stocks have started to fall again, and it's not really clear why. They're all dropping. He thinks it's a bit like what happened after last year's DeepSeek incident, when everyone overreacted and sold off too much. And yesterday, AMD's Lisa Su, her stock price dropped by 17%, right? It seems like it fell 17%. Lisa Su also came out and said that the pace of AI development is exceeding expectations and the market just can't keep up with demand. I believe that's really the case. Right now, the AI market is still in its growth phase, still expanding. But it all comes down to the two reasons I just mentioned. Those two reasons are why short-term AI stocks and other tech stocks keep dropping and seem so uncertain. It's because, as I said, capital expenditures are too high, and people are worried that the cash flow won't make up for it. Plus, investors are raising the bar even higher. So honestly, there's nothing wrong with AI itself. The issue is that investors now expect even higher revenues from you since you're pouring in so much capital. You have to generate high revenues to cover your capital expenditures. Are they really that high? If your capital expenditures are so high, but your revenues can't keep up at the same pace, then why are you throwing in so much money? Of course, from the company's perspective, they think they have to invest more now so that they can have a solid footing in the AI field in the future. But most investors don't look that far ahead. They only care about whether your revenue next quarter can cover your capital expenditures. If it can't, then I'll worry that you'll have cash flow problems. That's all there is to it. So it turns out that AI itself isn't the issue, but some investors have short-term demands for high revenue. So, of course, when we talk about AI, besides AMD, which we discussed yesterday, because it broke through that very important neckline yesterday, so you need to pay a bit of attention here. As for NVIDIA, this area is where it's been consolidating and fluctuating within a range. This range hasn't been broken yet, at least not for now. Yesterday, it dropped 3.41%, which is quite a lot. The support for this consolidation area is right around the 200-day moving average, pretty close to that level. If you look at the chart, you'll see the 200-day moving average right there. What you need to pay attention to is that in the early morning of February 26th, or rather the morning of the 26th, NVIDIA is expected to announce its latest quarterly earnings report. When they release this latest quarterly report, just like before, the same thing applies. Right now, NVIDIA's stock price is basically determined by its earnings report. A good earnings report is basically like a top student scoring a 98. It's just what you'd expect. So when a top student performs, if on February 26th you see NVIDIA's earnings beat expectations, that's just the baseline. The stock price might not necessarily go up. That's the baseline. But if their first quarter outlook is conservative, their China stance is cautious, or revenue misses expectations, even by 100 or 200 million, it's possible that this range of fluctuation could be broken through. So if you're holding shares, you need to be a bit cautious. Ideally, before their earnings report is released, if the stock price surges or hits a high, you should try to partially adjust your position or take some profits. You don't need to short the stock, but you can take some profits, sell a portion to lock in gains, and keep some of your position. Maybe keep 10%, 30%, or 50%, whatever you prefer. Hold on to some shares and wait for the earnings report, because whether the report is good or bad, nobody knows. Just don't bet everything on whether the earnings will be good or bad. Because right now it's really tricky. Even with a good earnings report, the stock might not go up. If the earnings are bad, the stock could drop in a confusing way. That's basically the situation we're seeing. I just wanted to add this point about NVIDIA for everyone. Lastly, let me mention Novo Nordisk and Eli Lilly, these two companies with weight loss drugs. A lot of people might be using these weight loss medications. I know Eli Lilly, that Remember we talked about this before, about dreaming for a long time? I have a few friends around me who went and bought it, and every week they take a syringe and jab it into their own belly. Just like that. Bam, one shot. Each shot, I think, is 2.5 cc of the medication. Once you start, it's a weekly injection. After 4 weeks, they lost about 5 kilos. It works, but it's not easy. Side effects vary by person, so get a medical evaluation to ensure this medication is right for you. So it has its own customer base, and the demand in this market is extremely large. The profits here are also huge. Now, Novo Nordisk, be careful, Novo Nordisk has said that due to the sharp drop in drug prices in the US, their sales in 2026 might see a revenue decline of about -5% to -13%. Oh, but its oral version, the oral weight loss drug, since before you always had to get injections, right? Compared to Eli Lilly, Novo Nordisk was the first to launch an oral version of the weight loss drug in mid-January this year. So far, the results on the market have actually been pretty good, and the reviews are quite positive with a lot of people using it. 170,000 patients have used it, and 80% of them are first-time users of weight loss medication. And it's not that people who were originally getting injections switched to the oral medication. In other words, 80% of these are new customers. So this is actually helpful for Novo Nordisk's future revenue and profits. The key point is that Eli Lilly's oral medication hasn't hit the market yet. I believe Eli Lilly's oral drug launches this April. If it gets FDA approval, it'll be available then. Once it hits the market, will it cut into Novo Nordisk's market share? Definitely. It will 100% take some of the market share. By then, with both oral medications available, it'll be a real competition to see who comes out on top. That's the current situation. What's interesting is this oral medication, although it launched in mid-January, Novo Nordisk already mentioned in their fourth quarter financial report that by 2026, their revenue and sales might decline. But it's a different story for Eli Lilly. They reported strong revenue and profits in their fourth quarter financials, and their outlook for the entire year is also very positive. They're expecting really great results. So overall, I think, even though Eli Lilly's oral medication hasn't even hit the market yet, If their revenue and profits can already outperform Novo Nordisk's even before their oral medication's on the market, then once that oral drug launches, it could really give their stock price and revenue another big boost. Definitely a plus, and a significant one at that. In fact, if we look at their stock price, strengths and weaknesses are clear. Take Eli Lilly. Yesterday it rose 10.3%, while Novo Nordisk fell 6%. That's a huge gap. Lilly is hitting new highs over $1,100, while Novo hits new lows. Remember this. Both are weight loss drugs, but which one is stronger, which one is weaker? For example, you don't want to buy the wrong one, don't make the wrong choice. Let's circle back for a second. I just mentioned Eli Lilly's drug, but I forgot to tell everyone. At 9:30, the economic data was released, right? Let's take a look at the economic data. Market impact is as expected. Initial jobless claims just hit 231,000, higher than expected and the previous figure. Continuing claims were 1.844 million, meeting expectations but up from before. This suggests a weakening job market, supporting the case for interest rate cuts. It supports the case for rate cuts. This data provides a strong argument for rate cuts, meaning the Federal Reserve would say, hey, the job market is weak, so it will use rate cuts to stimulate the economy. But the bigger issue right now is that this economic data is kind of like a drop in the bucket. It may be favorable for the U.S. stock market, but the real problem now is earnings season. Right now, during earnings season, as I just mentioned, even if a company reports good results, the stock doesn't go up. But if the results are bad, the drop is much bigger. So at this point, whether earnings are good or bad has a bigger impact on the market, because after all, stocks have risen a lot, and a pullback is the pressure everyone has to face in the short term in January and February. So just to add a bit more for everyone, earlier at 9:30, the employment and continuing employment numbers were released. Then tonight at 11 o'clock, we can take a look at the JOLTS job openings report. So that's at 11 o'clock tonight. If you have time, check it out. You can also keep an eye on that. Now, as for the U.S. stock market before the opening, someone asked about sparkling water. How much does it cost? And if you stop using it, will you gain the weight back? Well, I don't really know because I don't seem to need it, so I've never tried it. But according to my friends around me, based on their experiences, the cost is... It seems like each clinic or doctor's office charges differently. Some places are around $10,000, some are $15,000. I'm not really sure. You have to go to the clinic or hospital and ask because the prices can vary a lot. Plus, everyone's experience is different. Some people don't get the shots and end up gaining the weight back, while others, if they combine the shots with diet and exercise, can maintain a good figure. Anyway, when it comes to losing weight, just remember, the road to weight loss is honestly a long and winding journey. Whether you're using injections, taking medication, exercising, or dieting, this path is always going to be a long one. It's really not easy. I mean it, it's really not easy. But I still want to strongly encourage everyone. I want to give everyone a testimony? Yeah, kind of testimony. Because I once had a friend around me, you know. It really wasn't easy for her. She didn't take any medicine, didn't get any injections, and didn't even exercise much. She just relied on adjusting her diet. She used to be a 95-kilogram woman. Yeah, 95 kilograms. That's actually quite heavy for a woman. A 95-kilogram woman. Then she spent about 2 years on this. She didn't really exercise much either. For breakfast, she just ate more controlled foods like steamed buns, boiled eggs, or sometimes paired with some fruit. That was pretty much it, and she actually managed to stick with it for almost 2 years. And her weight dropped from 95 kilograms to, how much? Down to 55 kilograms. That's like losing half a person. This is a real case from a friend of mine. Her willpower is incredibly strong. Not everyone could do this. I've seen her in person. From 95 kilograms down to 55 now. It's truly impressive. It's truly impressive. She lost weight without medicine or injections, showing how vital willpower is. Now for pre-market movers. 80 Technology is up 10% and Broadcom rose 4.79%. Broadcom is gaining because they designed Google's TPU chips. If Google doubles investment to $180 billion, Broadcom's stock naturally climbs. That's why it's up 4.79% in U.S. trading. Applied Materials is also up. Anyway, 2 or 3 companies like Cree or Amphenol and even Netflix, as well as AMD, are also up about 1.5% in pre-market trading. Even Nvidia's up. Nvidia rose 1.4% in pre-market to around $176, though it later dropped. As for companies like I just mentioned, Qualcomm's stock plunged 12% in pre-market because its earnings report was weaker than expected. Carrier Global, which makes air conditioners and compressors, also missed earnings expectations, and they said it was because the real estate market isn't doing well. So Carrier in the U.S. pre-market dropped 11%. Also, Estée Lauder had a poor earnings report as well, and in pre-market trading, it fell 10%. Coinbase also dropped 3.63%. So you can see, basically, anything related to cryptocurrencies or with disappointing earnings reports is just falling in pre-market trading. Google's capital spending doubled, so despite good earnings, its stock fell 3% pre-market. It's just market perception. The Dow is up 0.53%, holding above key moving averages. But watch the Philly Semiconductor Index. It plunged 4.36% yesterday, hitting this line. This rising pattern here, yesterday it already touched this area, so don't let it break down. If it breaks below, the consolidation period will get longer. If it falls below these 3 lines of the triangle and breaks down, the correction will be tougher, and it might not even be able to hold the 50-day moving average. This is a short-term, or rather a very short-term pressure point. As for the semiconductor giants, the so-called Magnificent Seven, right now Google and Apple are holding up a bit after hours, while the other 5 are relatively weak. QQQ also fell 1.75% yesterday, dropping below the monthly and quarterly averages. Right now, only around this red circle area is stronger support. Sure, there are good mechanisms, but is continued market support still needed? Yes, but the January rally is basically over. February is more volatile with heavy profit taking. It's the same for Taiwan, US, and other markets. Overall, the Q1 outlook remains positive. January was strong, but February saw a slight correction after that initial surge. March and April will depend on upcoming data, which we'll track closely. That's it for our pre-market update. Remember to like, subscribe, and share. For any unanswered questions, we'll follow up with everyone in class tomorrow and provide additional details one by one. Finally, wishing everyone smooth trading. See you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.